G'day everyone, my name's Greg Canavan. Welcome back to the Rum Rebellion. It's been a couple of weeks since I've given you a market update. The last one I did a few weeks ago on the precious metals. Since then we've had a pretty strong move in the precious metals, so that's all looking good for, I guess, a further move higher in 2019. So I'll come back to you in a couple of weeks with some more news on gold stocks and also silver, as I have mentioned before in those updates. But this week I want to talk about, go to the US market. A lot of the news in Australia has focused on Aussie stocks breaking out to new highs. That's a result of the RBA cutting interest rates, and there's a lot of money moving off the sidelines, so to speak, to buy into the stock market, given that yields are so low in interest rate markets. And so there's a lot of bullishness around in the Aussie markets, but the Australian market follows the US market very closely. And I think for astute investors, we really need to look at the US market, see what's going on over there before getting too carried away with the recent highs that have been made in the Aussie market. So with that in mind, let's have a look at the first chart, which is the NASDAQ. Now, previously when I've given you updates on the US markets, I've said that the NASDAQ is a very important market to watch, given that it really led the bull market. And when I say led the bull market, I mean the really big bull market that's been underway since the GFC bottom in 2009. Tech stocks have led the way, and that rally has really increased over the last couple of years from 2016, big rally in 2017. Now, if you look at the chart of the NASDAQ here, it topped out in 2018, big sell-off and another big rally back to the 2018 highs, breached those slightly, and we've sold off again. So that's in direct contrast to how the Aussie market's going. We've made new highs, but the US market isn't following along. More recently, in the last week or so, the NASDAQ's rallied again, but as you can see, it's still in a double top formation there. And my view is that there's a risk that we're going to see further falls as 2019 unfolds. Now, the next chart I want to show you is, I guess these are all the large stocks that make up a large part of the NASDAQ. First one here is Apple. Once again, you can see the 2018 high quite clearly there. Big sell-off into the end of 2018, and the rally that petered out around April, May, couldn't get anywhere near those highs actually. So that's quite a bearish looking chart for Apple. Next chart is Amazon, obviously one of the largest stocks in the world, if not the largest listed stock. Same situation here, peaked in 2018, sell-off, rallied back, couldn't match the same peak, so we've actually made a lower high there for Amazon, in the same as Apple. Recent rally now, we'll see where that ends up. And if you're looking at the moving averages, you've got the 50-day moving average above the 100-day moving average, which indicates that we're still in an uptrend there for Amazon. But looking across the tops there from 2018 and then in April, May 2019, lower highs there indicate to me that the trend might be in the process of turning down. Next chart, Facebook, another large stock listed on the NASDAQ. Really sharp high into 2018, big sell-off, same pattern again. Couldn't match that 2018 high, and once again selling off. Slightly different chart here for Alphabet, which is the parent company of Google. Once again, high in 2018, sell off, rallied right back to that high, actually punched through it and breached it on an earnings announcement, but the very next day the earnings weren't as good as expected, and the share price gapped down and really hasn't recovered from there. You've seen a big sell-off, nearly all the way back down to the 2018 lows. So that's a chart that's not looking good at all, and given that's one of the largest stocks on the NASDAQ, and also very, I guess, economically sensitive stock. I think Google has about 30% of the global advertising or digital advertising market. So it's either suffering from increased competition or obviously from slower global economic growth, and it's probably a combination of those factors that are causing the share price weakness in Alphabet/Google. Next chart here is Netflix, obviously another big sort of network-oriented stock, whereby the more people it gets, the more value the company gains. peaked in mid-2018, big sell-off, rallied back, once again couldn't match those highs, and it looks like it could be in the process of turning down again. So that's a similar pattern to all the charts we've had that I've shown you so far. And the final chart here is the Twitter chart. Once again, big peak in mid-2018, big sell-off, slightly different structure to the others, but once again it's rallied, tried to rally back in 2019, got nowhere near those, or not particularly close to the highs of 2018, and once again selling off. Moving averages indicate that the upward trend is still in place there, or it hasn't really broken down, but like I've said with some of the other stocks, the failure to get back to the highs of 2018 indicate that there's a bit of weakness. The reason why I wanted to highlight these stocks to you today, as I said, the Nasdaq led the bull market up, and I think it's going to be the lead indicator for if the market does turn down into a more bearish phase. So for me, that's a really important indicator. It's something I'm watching quite closely, and despite all the positive news and the bullish breakouts that you're seeing in the Aussie market with stocks going to new highs there, I think it's really worth watching some of these bigger tech stocks in the US and seeing how they perform in the next couple of weeks, because as I said, you've seen stocks not be able to rally back the 2018 highs. To me, that's a bearish indicator, and if I'm right there, I think in the next month or two you'll probably see those stocks start to break down further. So keep a close eye on those, and I'll check into this sector again in the next few weeks or months. Thank you.